Hi, everyone. Thanks very much for joining us. I'm very pleased to be joined with Siobhan Clarke. Siobhan Clarke works with Episode 1 Ventures. Siobhan started out in product marketing for an online e-commerce product. She's led an innovation team at a small consultancy focused on economic development, undertook an MBA at Manchester Business School, served at Cisco, leading transformational IT projects, and led in the commercial development for a SaaS product prior to launch before coming on to Episode 1. So operations background, and investor background. Thank you so much, Siobhan, for kind of joining us today.
Real pleasure to be here, Rob.
Thanks very much. So just to start off a bit about Episode 1 and what you look for in prospective businesses, especially like the stage and the types of businesses that are most relevant to you.
Sure. So at Episode 1, we invest in UK software companies at seed level. So what does that mean? That essentially translates into investing somewhere between 500K and $1.5 million and rounds up to 2 million. We tend to focus very much on two areas, deep tech and marketplaces, partly because we bring deep experience of those two kind of subsegments, but also quite honestly, they're the most interesting companies that we see and get really, really excited about working with. But I think above all else, we invest in people, we invest in kind of incredible founders that have a passion for building industry-defining global businesses.
So obviously incredible founders are important, but you write a lot about actually understanding your market and understanding your go-to-market strategy. So why is the go-to-market strategy so important for early stage founders to think about, especially those maybe who might not be quite ready for Episode 1 yet, but like why should they be thinking about this so early on?
Yeah, sure, Rob. So like, as I mentioned before, we're very kind of stage focused. So we kind of invest at seed, get the companies to the best Series A possible. That's our job. And that allows us to kind of see things happening over and over again. So the 30 companies that we've invested in, their biggest challenge that they've actually got is how do we kind of prove value in the product and service that they're delivering without kind of running out of cash effectively.
Yeah.
And whenever we take a step back and look at, well, what is go-to-market and how do you kind of define that? We see kind of go-to-market, it's effectively taking a bunch of resources and using those resources to get your product or service into the hands of customers and kind of proving your early value with those. So that fits to the use case in terms of you've got some resources at seed level and you've got to prove incredible value to a customer base to say that means you're going to grow this incredibly big industry-defining global business. So what does that actually mean from a go-to-market standpoint? That really means about it deeply understanding kind of the first few customers. So that's like which use cases, which groups within the customers, what's their personality, what coffee do they drink, how much should you be charging those customers, what value do you bring, what language does the customer use in order to be able to describe the value that you bring, what demand generation techniques, what sales process you should use, how you should support those customers after you've kind of already got them committed to your product and service. So it's about putting all of that kind of into practice and producing results that are back to proving that value so that when you come to a Series A or you come to your next round of investment, you're effectively scaling out different parts of that go-to-market.
And it seems like a lot of people get confused with this idea of what is the market opportunity versus the actual go-to-market strategy. And I know that because I read the stuff that you write, right? But why do so many founders confuse that? Is it because of the stage they're in? Is it because they're so close to their business? Like why do you think people confuse that?
I think one of the major things is that, as founders, we can be quite logical, very, very kind of logical about the market. And one of the easiest ways is you almost take an engineering approach and you say, hey, the market is 7 billion globally. If I take 1% of that,
yes,
that equates to a huge market. And so there we go, right?
Money.
Yeah. We've all done that, right? It's your starting point. That's where you begin. But then almost to the point that we talked about in terms of the customers, you've got to really deeply understand them. So that percentage approach kind of, it neglects to take into consideration the actual dynamics of the market. So the way that the customers actually operate and make decisions, the emotive, often unseen areas. So what you really need to be doing is actually building much more of a bottoms-up approach. So understanding what value you bring to which customer base, and then kind of not necessarily ruling out this bigger picture of X percentage of the market, but more having an understanding about what is your growth journey in order to be able to get to that 1% of the 7 billion market.
Yeah, what's the micro mechanics, not the macro vision in a way. And okay.
Yeah, and you almost need to understand that for different types of customers. And then back to that resources point, you've got a short stage in order to be able to prove value. Yeah. So which ones do you work with first in order to be able to prove that value to unlock the bigger piece?
And when thinking of, obviously, there are different stages of what good looks like when it comes to figuring out how to articulate that go-to-market strategy and how much you're able to do with a certain amount of funding that you already have. And so there's always a temptation to do more. But in because you're focused on seed, what does that actually look like? Maybe just using examples or whatever, for when a company has shown has kind of shown that they understand what that go-to-market strategy is, bearing in mind that it all might change. What kind of what do you look for?
What evidence?
How deep an evidence packet would someone expect to come at you with?
So it's almost like often when we see people coming to us at the seed stage, they've definitely got an MVP in place usually. They've got some customer evidence or traction points to prove what they're doing. Now, if you look at marketplace businesses, that's a higher level of evidence that you need to have for the customer traction piece.
Yeah.
Now, as you go from that kind of seed to the Series A, what you'll see is that, and certainly from a Series A point of view, you'll see that typically this sales process during the first 6 months of the seed investment, it's like you've brought on board, certainly from a deep tech point of view, maybe 2 customers. It's taking you 3 months each time. You've been learning. You've probably had 2 different pricing models, maybe multiple during that time offered to customers. But within a 12-month time frame, you've shortened your sales cycle because you've figured out what the customer wants. You're preempting what that is. You know who is the right person to kind of go and speak with. And so that sales cycle of 3 to 4 months maybe reduces down to 3 or 4 weeks. Mm-hmm. Or in a marketplace scenario, perhaps that moves from weeks to days to hours before they're kind of transacting in what they're doing.
You're not talking about big numbers. You're talking about just evidence of learning and evidence of traction in the learning rather than a million users.
Yeah, exactly. So you're looking at shortening of sales cycles, customers onboarding faster or seeing your value proposition faster. Mm-hmm. And you're also looking at 2 or 3 iterations, usually around pricing and the way that you've kind of figured out that value exchange with the customer.
Are there any kind of are there any metrics that you don't see enough of, like that you wish that people were focusing on versus other ones that they might think of as vanity? You know, we all know churn, your viral coefficient in terms of social. That's what we care about. Like what are some metrics that you actually I don't know, maybe think are a little geeky, but actually tell you a lot more than what people usually share?
Time from first sales conversion, time from first contact to actually kind of getting a deal across the line.
Right. Time to live.
Yeah. So time to revenue, so to speak, is one of them. And then the second one would be particularly where they're bringing on additional commercial people. Sure. Time to your first commercial hire or your second commercial hire actually gets their first revenue across the line.
Okay.
It's a testing point to know, have you attracted the right talent? Do you have a kind of a playbook, a customer playbook in place? And can you scale that effectively the more kind of resources and support that we add into it?
Cool. So when working with founders or when dealing with founders that are obviously interested in in working with you, right? What are kind of the common, I wrote it in as face palms, but things that you deal with that seem to happen over and over that maybe you don't really understand why, or maybe you do, you get why, but what are some of the common things that you see that you just really wish wouldn't happen?
Yeah, and there's almost like before we invest, so it's almost like the important
this is before, yeah, exactly.
Because the after invest is a whole other story. Before we invest, I mean, there's a bunch of stuff, the confusing market with opportunity that we talked about. The second one, which is partially related to kind of not being honest or kind of having a fear about where they actually are. So it's like not being clear about what is in their sales pipeline or their customer pipeline, being very, very kind of honest.
Customers like these companies.
Exactly. That's a huge one. And then the third one that I see is actually around where we've got something that's in a very competitive space. You have to be really clear about what your value proposition is. And I've seen so many founders come in and they're being way too general about what that actually means. So if you're going to go into, let's take an example in the marketplace. If you're going to come in and you're going to describe upfront about the marketplace, I need you to be telling me why you're unlocking supply in a new way, or you're generating demand in a different direction. I want to know about what you think those liquidity conversions are going to be on the inside. I want to know about positive and negative kind of reactions on one direction or another. Now, you don't have to have all the answers. In fact, I'd be surprised if you actually did. But being open about, we know X, Y, Z, we have a hypothesis about A and B, and this other stuff we just don't know yet, but we know that that's something that we've got to prove out or understand over the next 18 months of this seed invest.
Right. So just saying, we're building Airbnb, but we're doing it with blockchain isn't enough.
Exactly. I think that might be one where half the people in the room would walk out.
I hear that. I hear that quite often. Like, oh yeah, but we're doing it with blockchain. So, okay. All right. Well, that's great.
The blockchain one's an interesting one just because it's like, well, why are you blockchain compared to just a standard database? And I don't really understand.
Exactly.
So it's not really blockchain. Okay.
Yeah. Definitely real uses for it. But, using something that's far more resource intensive and far less efficient. Anyway, never mind. And
that just destroys the capability, right? Because we're going to have a long relationship really long.
Yeah.
So, can we be clear with each other about what we know and what we don't know?
Yeah, exactly. So speaking about then the people that you do move on and work with, so when thinking about maybe specific companies in your portfolio, what are some of the attributes around founders specifically that you see that you quite admire, that maybe you see trends or in isolation, but what are some of these kind of attributes that you see that are, I don't know, great?
Yeah, they come through as soon as, almost within the first 5 to 10 minutes when they come into the room.
Right.
You're kind of like, whoa.
Okay.
Number one, there's, I wouldn't call it an attribute, I call it a visceral feeling, where everybody in the room, for some reason, the energy just uplifts.
Yeah.
And you get excited.
Yeah.
You're not quite sure why. I mean, there's obviously metrics and markets and everything to go into, but you've got a visceral positive reaction to it. And when you start to break that down as to, well, why is that? There's a couple of things that we see coming through. One is passion, where people are believing in much bigger visions than themselves, sometimes even than the company. And what they're doing is using the startup and creating the startup to ensure that vision or that reality of the world comes into being. And you can see that when you talk to a great deal of founders. The second one is presence. They come in, they're very vocal about their space, they hold the conversation, and they have an ability to listen and engage, but at the same time are comfortable with saying, I don't know that yet, but I am an expert in my space. And then the third one that we often see, which is back to our kind of like customer conversation here, is where you've got people that have got a very deep appreciation for the sector in which they're operating. So they really kind of know deeply what that customer base is. They're really kind of inside their head. They know the types of kind of clothes even that their customer would wear. They just intimately understand them. And those are really the kind of three things that we say coming through.
They give you a warm, fuzzy feeling.
Oh, totally. Don't ignore the warm, fuzzy feeling. Particularly at seed stage, it is about working with someone else.
It's because it's going to be grueling. Yeah. So speaking just about like the wider world of venture capital for a second, what can or are there things that you've seen, initiatives that you've seen that people who work in venture can do or have done to improve the representation of businesses that they invest in? I mean, you probably know better than most about the statistics around how a lot of the people that you're probably going to meet with look like me, you know, white, loud, male. No, but in terms of representation, finding people in non-traditional backgrounds, from people who maybe had never thought about building, that they've been able or empowered enough to build companies themselves. What are some things that kind of the VC community is doing or should be doing to kind of engage those more?
And I think we know that all change kind of begins with being fundamentally aware of the issue.
Sure.
So I think being open and vulnerable as VCs, to be able to say, actually, we need to recognize that we all have biases, and we need to kind of be very, very conscious of them. I think there's a second point in terms of the representation. You know, what does underrepresented founders mean to a particular fund? Is that associated with gender? Is that associated with kind of regional bias? Is that to a specific subsector tied to a type of individual that's coming in? So I think being very open internally about talking about that is hugely important. And then I think there's also a representation that isn't just about founders, but is also about who are the angels that you work with that are kind of contributing to your deal flow, who are the LPs that you're working with and the ones that are kind of coming into your fund, and how important is the kind of wider representation of the industry to them, because we're all driven by a shareholder somewhere or another. And then I think very practically what we've seen, you spoke about some of the stats, but diversity VC and what Czech and the team have kind of built out, they've built an incredible level of resources that if you were just starting, they're the place that you would go to kind of begin that conversation. Now, if you're improving representation, I think all of those mean that you need to just be open to conversations, to people that come through. There are lots of whole new audiences, I think, of entrepreneurs and founders that are coming from different parts of, I'll be a London bias, even coming from the deep part of Southeast London, from kind of like Vauxhall's becoming cool now, but actually there's a bunch of kind of founders coming out of there that are really interesting. It's not just people kind of moving in there. And that just, it adds itself to a mix within the community.
So how, kind of picking up on something you just mentioned, how does it work with deal flow? Especially at a seed stage venture fund, your seed is, a lot of people think, is the earliest or one of the earliest rounds that a company will do. And obviously, you have pre-seed now, and you have friends and family rounds, you have early traction. But like, how do you actually source your deal flow? And you mentioned working with specific angels. What's that dynamic like?
We've invested in like 30 companies in total over the last couple of years. And maybe just to give you some level of the stats of what we see. So we've invested in kind of like 30 companies, UK software companies. We've seen something like close to 5,000 pitch decks.
Exactly.
To that level. And that means that each one of us have at some point kind of went and worked through that. So we look to ensure There's all the usual kind of accelerators that we would tap into, and we're hoping that they are doing what they need to do for the represented. There's contacts that we've got, and I think as new people, so myself kind of included in that, come into the mix within the VC firm, we bring a slightly different connections and biases. And then as we do that, we've got kind of a bunch of existing angels that we work with, but we're always kind of looking for new ones. And let me give you an example to how that works to the underrepresented. So I talked about being underrepresented is not just about kind of gender, it's much, much broader than that. We also had we were very conscious that we wanted to be, we're UK, we needed to have much broader regional focus. Mm-hmm. So my responsibility was to go out there with an accent like mine as well, which probably helped, to the likes of Belfast, which has an incredible growing startup scene, and work with some of the early stage founders that are there, and work with some of the early stage funds that are there, in order to be able to help them to see what ambition looks like, and to bring in a different type of deal flow for us. Yeah. That also applies to kind of like Manchester as well. We do look at our stats in terms of, even from our angel standpoint, what's the balance of kind of gender, of regional, of backgrounds. And so we force ourselves to take an assessment of that and then proactively go out and see if we can find something that fits that gap.
Cool. Okay. And are there some interesting things that you're seeing, whether it's other VCs or angels that you're working with or accelerators doing some things? You mentioned diversity VC, but like, are there any others that are doing something just a bit different that I don't know, surprises you?
Yeah, I think on a global level, one of them is really interesting is Backstage Capital.
Exactly. That's what do you think of Backstage Capital? Which,
it's probably recently because it's top of mind because they're kind of just starting to kind of launch out into London.
Exactly.
But what I think is great about Backstage Capital is that they're very clear about what's important to them and what they're investing in, and they do not apologize for that. Yeah. And so that to me is like standing up and saying, we invest in this type of company with these characteristics because we believe they're going to grow amazing companies and we're going to return a great fund on the back of that. Yeah. And to me, their confidence in that, and the numbers will speak for themselves, so their confidence in that and their ability to kind of shout about that is really, really important to just elevating the conversation so that we are talking about the issue in a public forum as opposed to kind of hiding that behind somebody's spreadsheet.
Yeah, it's really important. So speaking of your 30 companies that you guys have, what are some of the what's some of the more interesting things that you didn't expect when you were kind of sourcing those companies? I don't know how many deals you've been involved with, but were there ever any that you thought, reading the deck beforehand or before meeting the team, you had a lot more questions than after you got the fuzzy feeling?
There's always a lot more questions.
And it's like first impressions before meeting them and thinking, I don't know about this, and actually saying, you know what, I'm on board.
Yeah. Okay. Yeah. We do have, there's sometimes a conversation that we have in the office, which is, we try to meet as many that we think is
sure.
Of course, the investment scope, we're like, that's really big business, let's build it out. And you meet them and you're like just blown away. And so you're having a conversation around IC about trying to convince another partner, sure, I want you to meet with this team next week. And they look at the deck and they're like, no, why is not interesting, you can't remember. And you go back to kind of those ideas that I talked about before, an appreciation of the customers, the passion and the presence. And we'll be like, no, look, you've just got to meet them.
Yeah.
They're going to blow you away. They have what it takes to build a big company. Just know. So why don't you just meet them and see? And we've built up a level of trust. Sometimes we get that wrong here. Yeah. We have built up that level of trust amongst us to be able to go, okay, I'll meet with them and I'll take that on forward and do it.
Cool. Great. Well, thank you so much for giving your time and for taking a little bit with us, and really appreciate it.
Absolutely, Rob. Anytime.
Thanks. Alrighty. Take care.
Bye.